Good evening, all. It's such a pleasure to see you all here and under one roof. And we're also happy to share our thoughts. And so we'll set the ball rolling. I have with us our MD and CEO, Thompson. And we also have Mr. Harish Shenoy, our Chief Financial Advisory. And also he handles it and Mr. Rajiv Limaya, who's our corporate secretary. So we have a company secretary. So I'll hand over the proceedings now to Snyder, who will sort of guide us through the sequence of events for this next 1 hour session. Over to you, Snyder.
Thank you so much, Priya. Thank you. Yeah, very good afternoon, everyone, once again. Firstly, thanks for taking time out for this meeting and to understand the business of 3i and where the current management sees taking 3i from here to improving our fundamentals going forward. One request. Typically, Thompson sir will take us through the current state of affairs and the roadmap ahead. Post that, we will open the floor for Q&A. Request you to raise your hand, unmute yourself, and ask your question. Let's just request that if you could follow a sequence, that would be great. And that being said, I hand the stage over to Thompson sir for his opening remarks. Thank you, and over to you, sir.
Hey, thanks, Snyder. I think we should keep this more interactive. And good afternoon, everybody. And it's always wonderful to interact with you all. So quickly, maybe a few statements, and then I would like to keep this more interactive. The new 3i, the way we look at it is that this 3i as an organization, we've been in existence for now more than 27 years, and now post the carve out of our product division, we have the services organization, which this new 3i team has inherited, and we are now building this new roadmap, to kind of chalk out a new transformation roadmap for new 3i. So that's where we are today, and it's a very interesting journey because we need to, in parallel, manage our run business, which is the business which we have, the services business which we have been carved out, and we have to run it more effectively. In parallel, also we need to kind of grow aggressively in terms of new lines of businesses and change the revenue mix, which is very, very important. Third is also try and build new products, platforms, services, which create IP and value for the organization. So this is a very interesting and extremely challenging phase of the organization. Secondly, also the new 3i needs to, focus this year would be predominantly in getting our fundamentals right, because it's very extremely important for us to get the foundation layers, the principles in which we want to build this new organization. And very clearly, we are kind of set out a goal for ourselves, saying that we're going to be $1 billion organization, and we intend to grow organically, in the next 9 years. And we're also setting short-term, medium-term plans as well. So as we rebuild the organization with a more stronger foundation, stronger fundamentals, which will help us to really scale this business. So that's the primary focus. So as we run our existing business more efficiently and we also grow aggressively as a challenger and as a disruptor, and that is the positioning we have chosen as well, because unless we come up with innovative go-to-market and value propositions, it's going to be extremely difficult in this hyper-competitive environment to kind of secure the market share, which 3i should have rightly be positioned for. So the other part also is then how do we kind of innovate incubate, and invent, which is the expansion of three I's as well for us in terms of how we want to kind of orchestrate and innovate new services with speed and agility, and also incubate and accelerate new technologies. It could be startups, which we could bring them, make them enterprise grade, build COEs and COIs around them, and then see how we want to take them to the market, which builds mutual value and also kind of creates higher value propositions for our customer and also for our shareholders as well. And finally, invent, because that's a very critical part where we want to kind of invest and create next generation technologies, which are going to kind of create a huge IP and valuation for our organization as well. And finally, maybe as a key theme, if you look at it, beyond the normal services we are looking at, we want to kind of productize services and also kind of build a more anything as a service model where even products and platforms can be now kind of taken to market with a more focus on customer orientation, industry orientation in terms of the business models. And then ultimately also our core focus will be maybe 2 years from now, we will be known as a company who's got a kind of a lead in the edge world, because we want to be known for our clouds are going to be edge ready. We are going to be focusing on edge security, focused on edge analytics. So fundamentally, the underlying principles will be on 5G, and we want to kind of get ready for the 5G powered era and also the edge era. So those are my opening remarks, and then I'm more than happy to kind of keep it very interactive.
Thank you, Thompson, sir. Following that, we would request each one of you, whoever has a question, can please raise your hand, unmute yourself and ask your question. We'll follow the sequence for the rest of the meeting. You're free to please raise your hands and unmute yourself and ask a question. Alternatively, I would also suggest that the presentation is on the website. We can always refer to that presentation for any kind of queries that we have. So, ladies and gentlemen, please feel free to raise your hand, unmute yourself and ask a question. Yeah, Akansha, Mayank. Ms. Shetty, if you have any question, please feel free to raise your hand. And Shraddha, would you have any question?
Yeah.
Sunil, yeah.
Yeah. Hi,
Yeah, Mr. Jain, please go ahead.
Yeah, thank you for this opportunity, sir. Sir, my question relates to 2-3 things. One is you said that there will be change in revenue mix. So can you bit elaborate on that? What type of services you would like to add, or it is related to geography which you want to expand and all? Where the revenue mix will change from here?
Thanks, Sunil. It's a great question, because see, one of the foundational shifts we have to make, Sunil, is because if you look at it, the old 3I was led by our products division. The services was also a separate business unit, but since it was predominantly led by product, the organization strategy was extremely different. And so the quality of services revenue which we had also was obviously dependent on downstream revenues on that. And if you look at our current challenge also is that we have to change the revenue mix to enhance our gross margins. That's point number one. So now that's a great opportunity for the company. That's why we say that we want to kind of come up with more disruptive, innovative services, and that's why we want to focus on orchestration. So just to give a small example, we have our traditional infrastructure management services. We have almost like 1,400 people deployed in our infrastructure management services and also in our traditional cloud services. Now we want to kind of, bring in a digital infrastructure management services. In a simple English, what happens is that your typical L1 services or L2 services also are replaced by our bots. Like, for example, we have our Maggie bot, which is our own, product, which is a self-learning cognitive bot, which would be able to kind of work seamlessly with our human SMEs as well. So fundamentally, the L1 gets automated. It's self-healing, self-managed. L2 is also kind of managed by the bots to an extent. So this changes the mix of our entire value proposition, and we want to kind of aggressively pursue that. It's not that our competitions don't have the technology. It's just a question of who's going to cannibalize first. And we want to kind of take a disruptive view in terms of how to kind of focus on services like this, because these type of services just straight away takes the gross margin from where we are, even in a domestic environment, country to country. If I'm even servicing from US to US or India to India, or any of these environments where you typically are around 18% gross margin, we can straight away go to around 35 to 40%. That's point number one. The second important point, I don't know whether we had a huge launch along with Oracle. Say, for example, we've been an Oracle shop and we have been, building a kind of an Oracle capability. But one of the very important strategies we have taken, and in fact, it's a combined with Oracle partnership. We are launching our own branded Nure range of services. So, for example, Nure is, Latin for cloud, but we are launching 3 services. Nure, it's got launched already along with Oracle. Nure 3i Plus is a Oracle powered cloud solution. It's end-to-end in terms of our cloud solutions, which we are offering. And for our edge also, we have our SASE solutions. So fundamentally, it becomes like a one-stop shop for cloud transformation powered by Oracle. It's a very, very carefully thought out, strategy, Mr. Sunil, because everybody is now focused on Amazon, Microsoft, it's the standard stuff. We intend to kind of, exclusively partner with Oracle, which kind of gives us a kind of a head start. And we want to kind of build a center of excellence around it, which is not just OCI, but we can also add on the PaaS and the SaaS and the entire works, which makes us a kind of a formidable provider. And this also kind of increases the revenue mix drastically. And if I go to my application services, the classic, our application development and maintenance services is also under huge disruption right now. If I take my testing services also, we are coming with our own platforms like Flexib platforms, which disrupts our own traditional testing models. Now, fundamentally, these are, self-learning cognitive technology, which is able to do self-scripting, self-learning technology. So fundamentally, what competition does with 100 human resources, we'll be able to do it with 50. So all this also kind of contributes to a higher gross margin. Obviously, the whole focus will be margin focused. I think the top lines are getting cannibalized. And finally, one more example, Sunil, would be like, low code, no code. These are good buzzwords, but it depends on, how you want to kind of use it and take it to the entire end to end. So we are building COEs around low code, no code. So for example, even in Oracle Apex, it's a challenger in terms of, no code. And this also fits into our OCI strategy as well. So we have the Oracle Cloud Infrastructure. You got an Oracle Apex. So using that, we can bring in, automation of, databases. So these are all new lines of revenues with higher margin, which comes in. And it also kind of shrinks the entire software development cycle and disrupts the way we want to kind of, develop softwares as well. So these will be like bread and butter business, Sunil, and these will really change the revenue mix. And of course, our next generation businesses, I spoke about edge computing, edge analytics. They'll be in early stages, but we are starting prototypes and pilots. And these are path breaking because our margins can be really massive once these products are in the market, Sunil.
Yeah, my next question was related to gross margin only. You had said something on that, but I would like to have more clarity on that in respect of since the gross margins are quite low. is this dependent on the nature of business, what we are doing, and the nature of business we will be doing in coming period? Or utilization is impacting that gross margin? So we have a lower utilization and our gross margins are low. So immediately, if the business is scale up, immediately some benefit of margin expansion can come. Can you comment on these two?
No, great question, Sunil. It's a fantastic question. In fact, yesterday we were having our own internal workshops on very similar lines. As I said, see, we want to kind of break this into three parts: the run, grow, and build. The run is our current business, which we have inherited, and there is a gross margin. And definitely, if you look at it, 3i has not grown the last 5 years from an aggressive top line perspective or a revenue growth perspective. So now post carve out, it also puts pressure on the current organization, basically because your highly profitable product business has gone away, and we have to kind of fix this as we are flying the plane. So what we are doing is, you're spot on. One of the immediate stuff is we are strengthening our resource management groups in the current existing businesses to kind of how to drive better efficiency, utilization, and all that standard stuff which we have been doing in this IT industry for almost 2 decades, and to get the margin enhanced in our current business. That's very important for us. In fact, Harish, who's there with us, drives he's our chief performance and compliance officer. He kind of drives business excellence and margin enhancements and also balance with global risk and compliance. So this is a new function we have started also to kind of just stay focused on, on margin enhancement of the current business. So that's very, very important for us because that really fuels our, cash for all the other investments we need to make. That's point number one. The second one is the grow part of it, which probably 3i lacked all this while. So we are stepping up a very, very aggressive growth engine, in terms of aggressive growth engine, where our focus is going to be on high margin business, transformation business, which is led by digital transformation. So we don't want to do any of our classic businesses, though however tempting it might be, we don't want to do it. We are taking a kind of a informed call on that, Sunil. So any new business we want to add, we'll bring in with a new revenue mix, the new margin mix. So over a period of time, maybe this year we'll have the order book. But I'm for sure the next year, when we start realizing these revenues, the revenue mix is going, the margin mix will change dramatically for sure. So second one is to kind of focus on aggressive growth, but very, very selective in terms of type of business we want to bring into the company. So that's margin driven rather than top line driven. So that's extremely important for us as a philosophy itself, Sunil. And the third thing is, of course, the build part of it. It is also we are investing in it very quickly so that it also brings us differentiator, and also it also slowly starts building a valuation for us because these are very, very critical IP which we want to kind of build, and it is also monetizable for us over a period of time.
Yeah, thanks for that. Can you figure out how much is the utilization right now and how much you can take it from current level? And second question, yeah. And the second question was the order book, what was it in 6 months? You may not quantify, but what was it 6 months before and how it has improved now? So you can think of growing in the coming period.
So I'll give you some broad headline numbers. Probably I won't want to comment on. Maybe I can comment on when I took over on 1st April. How it was and where we are today. Sunil, I'll do that. So as I said, see, the sales engine was dormant per se. We were not really accelerating at the level we want to do. And if I look at it from a pure investment extraction in terms of our SG&A, we are looking at it versus extraction. Definitely there was huge opportunity the way I look at it. So in fact, that is one of the important focuses. How do we get our SG&A investments to sweat and build the order book? That's point number one. And for that, if you look at it, definitely we are running with a target to exit this year with we call it the existing new and the new business. Fundamentally, it's net new business lines we are talking about. We are running with at least a clear-cut target of 100 crores order book, Sunil. exit this year, order book, so that next year we have at least realization of that revenue, and definitely want to change the revenue, the margin mix for sure. Our gates are higher, and we want to at least target a minimum gate of around 25% margins in this order book. What we want to kind of exit this year. That's one. And even some portions of that, as we speak right now, maybe we are looking at almost close to 25 to 30 crores order in hand, because we also got some good government contracts, and we have done that. We have also kind of renewed some of our existing contracts with additional revenue. So some of these are good trends which is right now. And your first question, Sunil, which is the utilization levels, is again a very important topic, because there are 2-3 parts we are looking at it. From I'll also answer your utilization. Definitely, if you look at it, the FT business is different from our transaction-based pricing business, right, Sunil? So definitely the transaction-based pricing, whether it's per ticket or whatever it is, or per change request, definitely we are looking at it, saying that, to your point, we are running with the internal AIM 30 project, which we are driving. We want to kind of look at a minimum upside of at least around 15%, 10-15% clear cut, eliminate of waste, and increase our utilization. So that's kind of translates to our bottom line. That's point number one. The second also is from an end-to-end processes perspective, right? From order to cash, or even from a entire DSO cycle. These are very important projects we are running to reduce the unbilled, because unbilled is a bane of any IT industry today. So to kind of reduce the unbilled, and also kind of to get faster revenue recognition, and also bring down the DSOs in terms of cash in bank as well. So these are very clear projects which we are driving, and in fact there are very good early shoots. We kind of brought it down from already from say around 108 to almost today at around 95 DSO. So and it's improving faster. So this so working capital turnaround cycles are coming down, Sunil. So that's where we are fundamentally.
Yeah, thanks. I'll fall back in the queue.
Thank you so much, Mr. Jain.
Thank you.
The next question we'll take from Shraddha Agarwal. Shraddha, request you to please unmute yourself and ask your question.
Yeah, thank you, Mr. Thompson, for doing this call with us. Quite helpful. So, a couple of questions. I really don't know much about the background of, why did we look at halving of the product business. So, just wanted to get your thought process on what was the rationale behind halving of the product division first, and then I have a few follow-up questions.
No, I think so. If you go back in history, though I was not part of it, and I'm part of the new 3i, and I've taken over. Effective 1st April. Shraddha, the reason is, see, 3i was a CDR company, and it was trying to restructure the debts, and so that's the single biggest need, because we had to kind of exit all the debts, retire all the debts. So this carve out is the positive for us as an organization. Is as I'm speaking to you, we are debt free today. So that's the good part. Today we are talking about new 3i, and we are now talking about all these new strategies and how we want to rebuild this organization is only possible because of this carve out, Shraddha. Because that has funded all this. If you ask me.
Yeah, that could have given us some financial leverage for sure. But when I look at your strategy still talks about getting more into IPs and building a product portfolio. So in terms of our focus on service offerings, probably 2-3 years down the line, we might again be getting into a mix of product and services business, which was always the case with the 3i earlier. So how is strategically, our direction any different from what we were, a year back?
No, great question, Shraddha. Great question. So I'll kind of step back and answer that even from an overall how the market and globally things are moving, right? Today the lines between product and service is all blurring, right? Today nobody's going to pay us licenses. Everything is all pay as you go. Even if you have a product, you need to convert it into a SaaS or a business process as service. So everything is coming into this anything as a service mode. So whether you develop a product or you co-create it or you build a kind of an ecosystem around it. So fundamentally today, the time available for solving a business problem is very, very limited. Now, whether do you develop a product grounds up or you kind of build around a white label the technology, that's a strategy which you say. So fundamentally, if you look at it, Shraddha, in my mind, every company, every technology company has to be a services company. It is whether the product is inside or it is orchestrated, it doesn't matter. So strategy is anything as a service, the way I look at it. And if you look at the foundations for that today, is the step why we have gone towards Nure cloud-led is because that's the beachhead. I'll give you an example today. Now, once I have the cloud, which is very differentiated right now, it's edge ready, it's secure. Then we get the PaaS side of it, the SaaS side of it, anything keeps adding on to it. We offer a business processes service. We can disrupt the normal BPO, things like that. So everything will be a service ultimately, whether it's your product or somebody else's product or you co-create, it'll all be provided as a service. So just to clarify, the product, what I mean is that if I own a product, it increases the valuation and the IP which I create. But how it will be consumed by the client and customers could be a service only, Shraddha.
Right, right. And just secondly, we've seen a lot of senior hiring that Priya has done over the past few months. So are we done with that kind of hiring, or are we looking at incubating more such leaders? And what is the kind of thought process behind hiring so much of senior talent, and what is the ESOP policy, or how do we look to incentivize the senior leaders who've joined us? Is it based on some PVT target? I mean, what is the medium-term growth aspiration for the company, and what is the lucrative, ESOP policy that we've given out to these key hires who joined us?
No, again, a fantastic question. So that's a great question. It's again one very close to us because again, as the new 3i, if you look at it, we want to be known as a professional entrepreneur company. Shraddha, that's a new DNA, and we want to be entrepreneurs. And if you look at a lot of the senior hires whom you have brought in today, are all like entrepreneurs. The way we look at it, So as you rightly said, each one of them have come in to build a certain part of the business as professional entrepreneurs. So their compensation plans are all linked to that, where all of us are single-mindedly kind of focused on that's one single goal. To your point, whether it's the ESOPs policy or it's kind of innovative ways of compensating senior resources. I'll give you a small example. The entire build portion of our organization, we have brought in our Chief Digital Transformation Officer, Mr. Raj Manikam. For example, he's a senior executive, who's worked for Cognizant, Verizon. He's been a serial entrepreneur himself, two successful and one not so good. But these are type of people who are joining us, and I would say that he's bringing in other entrepreneur in residence. So the fundamental is these are entrepreneur in residence. They all become like fundamentally like working partners to the company. Ultimately, each of them will own and run a subsidiary and create mutual value for themselves, for the organization, and for our shareholders. So that's the model, Shraddha. And to another question you said, have you done with the senior hires? Yes, of course. If you look at my directs, all the top leaders are in place right now to manage our costs. Some of the roles I am kind of managing it. It's a little stressful for me but I have to do it because we are in the startup stage. So in fact, all the practices still report to me. From a region wise also, we have now broken the company into kind of 3 focus regions. One is our current primary regions, which is like US and Middle East, and India region is India as a separate business unit itself by its and say ASEAN and other geographies are like emerging units. So I kind of manage India business unit myself. I've not hired a COO or a CEO right now, and so that we don't intend to hire immediately as well. This year we will run with this. We have to be focused and frugal on our costs as well. And but some of the other roles are all being hired. Now we are bringing in the next level people and building the capabilities also, Shraddha.
Yeah, that's helpful, Mr. Thompson. And just one last question from my end. Out of this $1 billion growth aspiration that we have by 2030, what is the number from inorganic activity that we are looking at?
If you look at it, it's a kind of a tough goal we took for ourselves. Ideally, if you look at our initial statement of intent, which we released as well, we said that we want to grow to $1 billion organically. Then if you want to add inorganic, obviously it'll be higher. And the goal is to see, can we bring in this $1 billion earlier, maybe as we generate cash, and at the right time, maybe we'll probably want to kind of, bring in some more acquisitions. But to your point, right now we want to stay focused on very innovative models in terms of even inorganic, because we don't want to go and acquire companies right now. Our focus is to get access of technology which will differentiate ourselves. So we will do things to get access to technology based on which we will build services which will disrupt and be a challenger. So that's the short term to medium term, at least the next 3 years strategy, Shraddha. To your point, maybe we'll have to revisit it after 2 years or 3 years as it goes by, what will be a kind of inorganic strategy.
Sure, sir, that's helpful. Thank you.
Thank you, Shraddha. Thank you for your question. We would now move to the next participant. Mayank, Mr. Babla, please unmute yourself and go ahead and ask your question. Thank you.
Thank you for taking the question. Am I audible?
Yes, Mr. Mayank. Yeah, hi.
Hi. Yeah, thank you for taking my question. Sir, if you could, delve a little deeper into this strategy, as far as you said that you would shift to a much higher margin business. So currently, where do we stand in terms of revenue mix? So what is the industry-wise mix that we stand at, or service-wise mix that we stand at, and where do we plan to take it over the next 2 years? And how will this high margin strategy materialize? So if you could delve a little deeper into that.
No. So it's a great question again, Mayank. So one of the short-term, not a short-term, kind of a 3-year goal we have set for ourselves. Now we want to kind of focus on our margin strategy. So in fact, it's a reversal in terms of we want to stay focused on saying that can we be a 100 crore EBITDA company in 3 years? So that's where we want to work. So now with all these cannibalization and digital disruption which is happening, the top line has no meaning, fundamentally. See, today, how do we, I'll give you an example, Mike, and then maybe I'll get into more specifics, okay? Let's take a classic human-centric business. You take any business, it could be business process services, BPO, or IT operations, or anywhere. I'll take a BPO example today. Maybe a customer service process has got 100 people today, and it's serviced by my competition. And we will say that, we'll be able to run it with 50 people because we are going to be digital first, technology first, transformation first, and we want to start it with that and stay focused on KPIs. Now, we can commit a 10% or a 20% upside for the customer, but still our margins will be doubled or tripled compared to that. So it's all going to be humanoid focused services. So that's going to be very, very important. So whether it is business process services, IT operations, application services, it's all going to be humanoid led. And we have no problem because we are a challenger. So we have no baggage like any of my peers or even larger competition, because it's not that they will not be able to do what we do. It's a question of who's drawing first, because they will not want to cannibalize their own revenues. We've got nothing to lose. We will cannibalize their revenues. So that's what we will do. The second thing also, I'll give you another example. These are live deals which we are working on. Also, there will be cannibalization or consolidation of revenues across, let's say, for example, today there's a cloud service provider who just sells cloud space, right? He's just a reseller for Azure or whatever. He just around 12-14% margin he will be selling it. Then there's a managed service partner who runs the entire transformation, runs the North SOC or whatever it is. He makes around 25%. And then you have a cloud transformation partner. The fourth is the next generation edge and all the good stuff you're talking about. Now we are saying, boss, we'll be a one-stop shop. Why do you need a CSP? Why do you need a separate MSP? Why do you need 2 other guys? I'll be a one-stop shop. You give me the entire budget. I'll give you a 10% optimization for you on the overall budget in terms of better, asset extractions, better, service levels, better quality, and then still we make more money out of it. So this entire thing will change in terms of what could be an average 18% GM, even in a country-to-country model where you don't have offshoring presence, into almost easily 30%, 35%. That is one. The other thing, mind, what is happening is our traditional offshoring model is under challenge right now. See, this entire IT industry was built around it. Even when I was in HP, we built almost like 10,000 people working out of India, with huge operations. I'm just saying, we brought all this here. But now there's a total reversal happening. So every country is now saying, okay, can you now keep it within my own, sovereign boundaries? So whether data resides there, so we need to change the strategy where it becomes more and more onshore, near shore, and India will be a very critical from a knowledge processing hub, where we have some, good skill sets which are differentiable from other things. Where that's where it is happening. Second, also there's a huge stress. If you ask me, a lot of the US, UK companies want to transition back the jobs. There's a big disruption which is happening. So these are the key trends which are happening, and maybe we need to probably leverage some of these trends. And for us, it's good because we don't have a baggage or we are in the right size and the right phase, if you ask me, to leverage it. Maybe if we were discussing in another brand where we have a huge, current incumbent business, which we are thinking twice to disrupt, we'll have a problem.
So actually, my question was more directed towards the quantitative side of it. So
I'll answer that.
So in terms of industries right now, we would be more inclined towards BFSI. Am I right?
That's right. That's right.
A large portion. So where would this mix shift to, or which industry are you looking at which would drive this margin expansion, or even in terms of services, if we are more inclined towards the application development and maintenance, then which other service are you, focusing on which would drive this margin expansion? If you could give us a bit quantitative details here.
Yeah, I'll do that, Mike. So I'll give you, see, for example, today, if you look at even our BFSI, which is our stronghold, because traditionally we have been a BFSI stronghold, still there's a huge opportunity for us to expand. So you look at any industry market split, if you look at 50% today in any share in a country today is 40% is almost BFSI. We have a huge opportunity to kind of, expand there in various lines of businesses. And also to see that, how do we bring in more and more digital embedded service mix, Mike. So that is actually going to change the margin mix, because we are now, as we speak, we are more human intensive. If I can do a mix of saying that, what's my human mix today, Mike? I would say I'm only around 10% to 90%. Now that mix has to change, and that's a clear margin contributor, right, Mike? That's point number one, which is very important. From an industry mix perspective, we want to look at telecom, media, and entertainment globally. India, we have a problem as a country, we are just like, but globally, it's a massive industry. And we want to stay focused on 5G powered services. We are bringing in the best in class people and very senior consultants, advisory to help us expand in the 5G powered services globally. So especially if you look at it from a 5G powered services, whether it is edge analytics, or edge security in terms of cybersecurity at the edge and SASE, industrial IoT and blockchain. These are 4 pillars in which we are investing and building services. This also leads to services revenue, and it will also lead to ultimately platform-led productized services revenue as well, Mayank. In the short term, it will give us services revenue. So the way you do application development, the way you do other transformation projects, we will get downstream services revenue in these lines. And we are putting together a crack team which is focused on telecom, media, entertainment, where telecom companies could be a customer, or we can also do B2B2C as well, for their customers also, their enterprise customers. So in fact, we are working on such deals across the world, partnering with a lot of OEMs as well, who service telcos. Say, for example, in especially in the security space, we want to kind of, build security NOCs and SOCs, which are focused to support telcos who support their enterprises. So we are working in those type of models as well, where we can go through the OEMs where we are partnering who support telcos as well. And apart from that, as a focus area, two new industries we want to focus is green tech and agritech. I would call it our emerging technology ones, Mayank, where we want to kind of invest for the future, because we want to kind of invest in something where it's too not crowded. So we want to stay away from the crowd. Our bread and butter, I think we are building a huge separate e-commerce vertical, because see, today the traditional telecom volume business, you look at India today, has been replaced by e-commerce. If I look at specifically for India, we need an e-commerce vertical, and we are very quickly ramping up that to leverage the e-commerce vertical. It could be done. The other one also is this: can we offer in a box to startups who are typically in Series B, Series C? It's a big opportunity because we offer everything in a box, right from the cloud, the enterprise grade architecture, everything. So they focus on their core product development. We offer all this in a kind of a box. As I'm speaking to you, we are kind of having 2-3 deals. Touch wood, we close them. These will be path-breaking deals which we could replicate across the world, where we have well-funded startups who could just give it everything to us in a box. They focus on the core platforms and technology. Mike.
Right. So thank you for that. And so, so if we have to look at it from a 2 to 3 year perspective, BFSI today being a large portion, what could we see the revenue mix being 2 years from now? Would it be, let's say, 50, 20, 20, something like that, as far, or 50, 50 as far as BFSI and telecom, media and entertainment are concerned? Yeah.
So I'll answer that. See, even today, if you speak, Mayank, government also is pretty large for us. So if you look at it, 2 large verticals are BFSI and government right now. So it's almost like, say 45, 20, and the rest, 25. We have a long tail across multiple industries. It's not that we are not there. We have in retail, we have, healthcare, we have all those, but we are not really expanded them. That's the mix today if you look at it. So broadly between government and BFSI will be around 65% today as we speak, right? But the way we look at it is also that, the shift will happen in the quality of business also. So what we are looking at is not really TME will become at least 20% more in this mix. If you look at it, we look at 40, 20, 20, because GovTech, we want to stay focused also because globally, every government is spending, Mayank, you will see some press releases coming. And so we want to stay focused on government. We want to be a kind of a force reckon in the government space globally also. So broadly, it will be like, say around 40, 20, 20 between these 3, BFSI, TME and government. And the balance 20 could be in, next generation emerging tech. And that also we want to stay focused on Agritech, green tech and areas where we want to kind of differentiate ourselves, Mayank.
So just sorry for delving deeper into this, but as far as government business is concerned, don't you think the receivables are a bit sluggish, and because other companies generally try to shy away from this this segment. So what would be your rationale to stick to this government business?
No, great question, Mayank. Great question, and it's a fact as well, right? If you look at it globally, your DSOs are the highest in government, globally. But see, if you look at it from a global trend perspective, post-pandemic, with most of the industries are almost in ventilator today, Mayank, governments are starting to spend. So whether you like it or not, you need to have a government strategy for the next 2-3 years. But the fact is, we have to be very selective about the deals we want to get in. It's very, very important. We want to be very selective. And to reduce our risks also, we want to play to our strengths and bring in partners, co-prime partners, where we can be prime, there could be co-prime, is what we need to go as a kind of, what do I say, like a joint bids is what we want to do. So we de-risk ourselves. That's point number 1. And second also is we see a huge uptake in the cloud business in governments across the world, Mayank, and as most of them also want to have edge-ready cloud, and it fits in well there. So we want to kind of be very selective about what we want to focus on government, and we want to keep the focus on the next gen technology. Say for example, I'll give you a small example. Right now we are working on say for example, video surveillance as a service. So we are now working with some governments to say that can we do that, because it's very critical for them. Now with our cloud, with video surveillance service, so we want to stay focused on some kind of areas where we'll have an advantage, where we can advise governments and help them create prototypes and pilots, not really go and respond for an RFP, if I may look at it, Maya. So our strategy is very clear on that.
Okay. And sir, a last question before I pass it on to the next participant. So these aspirations that we have, so a lot of investment would be required in the talent. And just looking at the current scenario where, it's cats and dogs out there.
Yeah,
Yeah,
yeah.
just giving an example, my friend in the IT space is working somewhere and has three offers already in his hand with a 40% hike, 50% hike in that. So, what sort of cost impact do you see from this, and is it manageable to acquire
No, it is
talent?
not. It is not. Mayank, I'll tell you, India is now, we are in a scenario, it's a temporary hike. See, the problem in India is very twofold. I'll answer this. It's a very important question, very, very important. In fact, in our staff meeting, we were discussing about this morning, so to kind of, we were talking about it. It's a universal problem. It's a problem for every company today. And it's not very sustainable for India as a country as well, if you ask me. So our strategy, I'll tell you, there are two prongs.
Yeah.
India, we want to be very clear. We do not want to go into this, rat race in my mind. We want to kind of build capability where we are now kind of trying to start our own. Maybe we need to look at our own branding like 3i University, like any of them. So kind of we want to look at tier 2, tier 3, colleges, and we want to train them, specialized training, certify them. So that's the route we want to take in India. We are very clear about it, man. Other skills, let's say, for example, 5G skills, IoT skills, we want to take it at the right shore. It can be anywhere. It can be Eastern Europe. It can be Vietnam, Malaysia. It doesn't matter anywhere. In fact, in US as well. US, if you look at it, a lot of our Indian students today are all graduating out there, and they don't have jobs. So we are now tying up and saying, we have this OPT program there. We can have these kids, the Indian kids in US, in UK, trained and certified and deployed in projects. So we have to have a multiple strategy, Mayank, because a very India-centric strategy will not work. At least for a company of our size, it will not work.
Okay. Okay, sure. So I'll pass it on to the next participant and I'll come back in the thanks.
Yeah, thanks.
Thank you so much, ma'am. Thank you for your questions. Anyone who has a question can please raise their hand, and accordingly you can unmute yourself and ask a question. For the time being, we have a question in the Mr. Jain, we'll come to you. We'll just take the questions in the chat box. So this question's coming from Jyoti from Meta Advisory. Her first question is, the ultimate goal of any technology company strategy, broadly saying, is improve the organization's most critical business functions and increase ROI. What role do new age technologies, if you can highlight, this will be helpful?
No,
and
absolutely.
What are some of the, sorry.
No, go ahead, please.
Yeah. And what are some of the leading challenges today the organization encounters in context of managing their technology footprint? If you can throw some light on that as well.
Yeah, I'll answer the first question because it's a very, very powerful question, because I personally feel the convergence of technology, digital operations, and industry orientation is very important. And for us, that's the core framework. That convergence point is the differentiator. And we want to stay focused on how we can align ourselves with the business KPIs of our customer and the functional challenges of our customers. So I'll give you a classic example of a services which we are now building vis-a-vis to how it will solve customer real-time problems. We call it the digital KPAS, which is digital knowledge process as a service. And one of that offerings we want to kind of, offer, in fact, Priya will be doing a launch very shortly, is CXO command centers on a service. What is this CXO command center? The CXO can be a COO, it could be a CIO, it could be a CTO or a CFO, any function. So fundamentally, we are offering neural sciences, cognitive AI-based, real-time analytics solutions. So fundamentally, the CXO can monitor the entire organization. If you can visualize a neural network, any process breakages, any flags, any escalations, any deviations from the KPI proactively. And the system is also self-learning. So this helps him to move more proactive in terms of decision making. So this is more, we are talking about decision support systems. But as this keeps going, this could be even prescriptive systems. in terms of where it can start prescribing the next best action for the CXO or any a functional leader to manage their operation. So this is something which we want to kind of focus, because all of them are going through this problem of managing the disruption cycle, because post-COVID the entire disruption cycle is kind of shortened. Transformation cycle is shortened drastically. So people do not have the time to really experiment, So it's a fail fast kind of a stuff. You try a prototype for 90 days, then move on. It works, you scale it up, or you just dump it, try another one. So I think that's where we want to kind of stay focused on business KPIs, functional KPIs, and then see how technology can be used and how you can infuse cognitive capability and decision support capability to kind of drive end outcome. So that's the kind of fundamental example. I'll give another example, classic example, Schneider, for Jyoti. Let's take, we're all talking about 5G and all this stuff, but if you look at what's going to happen, already in the last 18 months, all our data consumption has gone out of the roof because we are all consuming more data. The amount of virtual calls, so data consumption has gone up. Now just imagine if 5G happens, the data consumption is going to be 10x or 20x. Now, how are you going to kind of the cost of cloud, cost of infrastructure cannot manage this data. So now even to manage this data, one of the solutions which we want to provide at the edge is to even start figuring out the entire data life cycle at the edge near the device. Which data needs to be discarded? What data needs to be used for processing? What data needs to be kind of stored? Where it is stored? Will it get stored in the edge, or will it store in the central cloud? Where it is? So this entire optimization in the data cycle itself is a great opportunity, and that's where we want to participate. So these are classic business problems. The other single biggest problem is, in terms of security. The more the data, the more the devices, there's security challenges. So how do we now secure at the edge? Whether it's SASE and cybersecurity at the edge becomes real problems for any CTO, CIO, any CEO. So these are some of the kind of, business challenges which we want to kind of, quickly latch on and kind of, see how we could create some win-win proposition to our clients.
Thank you, sir. So we'll head back to the raise of hand. Yeah, Mr. Jain, please unmute yourself and ask a question.
Yeah, thanks for this opportunity again. So my question this time relate to more on the financials, like a company has a target of reaching $1 billion in 10 years or 9 years. Can you break it up in say 3 year or somewhere in between? Because 10-year 1 billion looks to be very steep, and the CAGR of 30% become difficult to absorb. So if you can,
great question, Sunil. Yeah, I'll try and answer that. See, in my mind personally, this the world is changing to a more bottom line focus, because in my mind, top line is getting cannibalized, because digital technology will cannibalize top line, right? Because the whole premise is that whatever 1,000 people did using technology, 500 people will do, you will get the same, or you will get even more bottom line than what you were making with 1,000 people. So this entire linear kind of model is disrupted, Sunil. So that's point number one. So the short-term goal for us right now, which we even communicated also very clearly, 3 years, we want to be a 100 crore EBITDA company, and the top line is 1,000 crores. So that's the challenge which we have set for ourselves as a goal, and we are running towards that. So 1,100 in 3 years is our goal from that. And I'll try and answer that larger question also, which is it's a logical question. How will you achieve this number of 7,500 crores organically? Also, I said that, and in say 9 years. So our strategy is very simple, Sunil. We are breaking this into 3 parts, and our organization structure also is now laid out in that. Leaders have all come in, and all of them are aligned in the same direction. So 2,500 crores will come out of India business. That is India to India. India itself is like a separate continent. It's like and 2,500 crores will come from India business. So that's strategy number 1. because we have such a big potential to do that. Obviously, you'll have margin pressures in India, but still relatively, we will be able to make more margins because of the kind of digital first approach which you want to take, and you want to be a disruptor. So that's a 2,500 crores. The second 2,500 crores, Sunil, will come from a traditional services business, which we all do, which is now anyway it's all digital enabled, and which is your digital IMS or your digital testing or application analytics and all the standard stuff, low code, no code. All your standard services is the 2,500 crores. The balance 2,500 crores is where we want to kind of accelerate, because that will bridge that year-on-year growth you're talking about, where we want to stay focused on B2B2C. And that is why we want to work with telcos as a strategy, Sunil, where we want to help telcos. See, now all the telcos also want to be a software company. All of them saying, okay, I also want to be a platform company or a software company, but the problem is none of them know how to make it happen. So I think it's a great opportunity for people like us to work with them. We can be that enabled partner to get it B2B2C. And that is where the next 2,500 crores will come, which is anything as a service, whether it is SaaS or PaaS or BPaaS, and that has to reach the C actually, because only by B2B, you will not hit it. When it gets B2B2C, and maybe we don't know, maybe in 3 years from now, we can also do something like B2C. We don't know how world is evolving. Nothing stops us. So for example, I'll give you a small example, Sunil. We are running our SASE product got launched. Now Edge, Nure Edge got launched 2 weeks ago. It's a typically B2B. We are selling it to B2B customers. They can buy SASE products for their consumption. And we have a Nure desk, which is an alternate for an VDI. So you want to work from home, you can buy it. Any corporate can buy from us. Now we are exploring, can we take our SASE product and sell it to a handset manufacturer and say, can a consumer, you and me, anybody can access it? So then that will be the real accelerator of the last 2,500 crores, Sunil.
Yeah, great. Thank you very much for that.
Yeah, thanks.
Thank you, Mr. Jain. If anyone has a question, yes, Mr. Mayank Babla, please unmute yourself and go ahead with your question.
Yeah, thank you for having me. So, as far as the sales strategy is concerned and client profile is concerned, could you give us a little detail about the existing client profiles, and going ahead, focus will be on gaining wallet share from these clients, and what will be the strategy for new client additions? And how can we differentiate in this? As you yourself said, that it's a hyper competitive market. How will our sales strategy differ from, say, any of the other vanilla players?
Brilliant question, Mayank. It's very important. It's a very important question, because a small company like us, relatively with with limited resources, we have to be extraordinarily careful on the bets we place. So for us, I think there are 2-3 tracks. One is, as you rightly said, how do we expand our existing clients, because we have anchor customers. So strategy number 1 is we have a clear-cut focus on expanding our existing lines of businesses with our existing customers. I'm just saying, for example, even some customers, we might be only doing a FTE contract or a staffing contract. We are saying that, boss, can I convert my staffing contract to a managed services contract, where we have more skin in the game, convert our FTE to that. So those mixes happening, which helps us drive better margins, better stickiness. That's point number 1. Second, now we are also trying to sell all the other new lines of businesses with the existing lines, which we never did before. Now, this is our only bread and butter right now. So we are now expanding very quickly on new lines of business. On a sales strategy, we are now telling our sales guys, boss, if you sell these new lines of business, you will have more incentives. So we're also changing the behavior of our sales guys also, in terms of across. So we have very clear practice-led and geography-led structure, Mayank. So we have practices, we have cloud-first practice, we have digital IMS, we have AAA, which is application automation and analytics, we have next-gen services. These are all various practices we have. And each of the practices work with the geographies also. So it's like a kind of a matrix, right? So they are like 2 in a box. So they both work together to drive that revenue mix change. That's very important, even within our existing accounts. And the good thing for us is, we have a unlike other companies where we have huge dependencies saying that, 80% of our revenues depend on our top 10 customers, we don't have that problem. Since we were kind of a product-led company and we were having services, so we don't have such problems. Fundamentally, that way our risk is mitigated because we have a large customer base. If you ask me, we have to just go and farm and expand. That's the good part of it. That's point number one. The second question you ask is, what is the new strategy? So even with Oracle, what we are trying to do, I'll give a small example on that.
Yeah.
Oracle is an authority in the enterprise space. Now, in some of the countries where Oracle Cloud is not there, we are saying, boss, we will be your representative in the mid-market.
Yeah.
So we want to be very focused on mid-market, very, very focused on mid-market. And we want to be a kind of a differentiator in the mid-market. So we don't want to go and compete in the tier one space and burn ourselves until maybe some tier one service provider or let's say, for example, if it's an Oracle-led strategy, they take us, it's fine. We are not going to waste our sales dollars in that. We want to stay focused on the mid-market very, very clearly. The third strategy where I am seeing a huge opportunity is that you will see that very shortly. I don't want to talk about right now. Once it is signed, we are also working with a lot of governments also to come up with an SMB strategy. So digitizing the SMB. So every country, every government, including ours, everybody is saying that how do you help digitize my SMB segment? So that is where we want to stay focused on a one-stop shop. So there we don't want to waste on huge sales dollars. It's fundamentally we put all the infrastructure, have a huge channel strategy, Mayank. You have various channel partners. We are now calling them all white label sales franchisees. Every entrepreneur in the place, we are trying to white label them as our partners and drive the SMB business. So SMB will be volume business and your mid-market will be a value business. So as simple as that, that's a very simple strategy, Mayank.
Okay. Sure, sir. I'll get back in the queue. Thank you.
Yeah, thank you.
Thank you, ma'am. Mr. Chen, would you have any follow-up questions?
No, thanks.
Okay, thank you, Mr. Chen. So we'll give it a minute. If anyone has any follow-up questions, please feel free to raise your hand and you can go ahead and unmute yourself and ask a question. If no one has any question, I will like to hand over the floor to Thompson sir for his closing remarks. And in any case, if we need any other query, please feel free to get in touch with anyone from Adfactors, and we will be more than happy to address your issue and connect you for a follow-up meeting, perhaps. Yes, Thompson, so over to you.
Well, thanks a lot, Snyder, and thanks everybody. Sunil, Mayank, and everybody else. It's a fantastic interaction and great questions. Really, appreciate your time as well. And as an organization, we want to be more transparent and interactive, and we want to be a listening organization as well. So really value your feedbacks. Please come back to us with any other questions, suggestions, insights you might have. This will really help us build a great organization together. Thank you.
Thank you, Thompson, sir. Thank you, everyone. Thank you for your participation and your time. Take care. Have a good day.
Thank you. Take care, man.
Thank you.
Thank you.